All right, good afternoon, everyone. Today is a very fantastic day. It's another segment of the Valor Financial Specialist training, weekly trainings we have, 4 o'clock Central Time. And this is still part of our In Case You Missed It from the great collaboration. And actually, the organization that's going to talk today was a last minute ad. And when we say last minute, it really was because it was. Uh, like 3 or 4 days before we were going to have a collaboration, and I had an opportunity to see these guys present at another function, and I was just so amazed that we were able to get some representation out at the great collaboration. And so I wanted to give you guys a proper channel for those who deal with premium finance, for those who don't deal with premium finance. This organization is a game changer, in my opinion, in many ways. I will not steal their thunder because, let's be honest, you guys want to hear from them more than you want to hear from me. So, with that, I will hand it over to Ms. Nicole Rex and Richard DeSantis to take over and tell us about the stream program. So, thank you guys so much. The floor is yours, and you should be able to share.
Thank you so much. I appreciate it. And good afternoon to all of you. Excited to spend some time with you all on this holiday. Um, so glad to see we're all working still. Um, so welcome to the Stream Plan. My co-founder and I, Tim Whitmore, who unfortunately couldn't be with us today, started this company approximately 4 years ago and came to selling it in the marketplace about 2 years ago. And the reason we started this company, I think it's really important to share with you all, is because what we found was like a huge missing place in our insurance industry. For those of you who are familiar with premium finance life insurance, you know that it's always been reserved for the ultra high net worth clientele. And while we all aspire to work with those people day in, day out, they're far and few in between. And we felt that we were truly doing like the community a disservice if we couldn't offer the same benefits of premium finance life insurance to people like myself. So, high earners that aren't that rich yet, right? People who are financially savvy, they understand financial products, they want to participate in them, but they just quite aren't at that level yet, right? And so that's the reason we really truly created this company. It was pretty much self-serving for myself. Full disclosure. uh, we started it because why can't like the Richards and the Me's of the world participate in these beautiful benefits of finance life insurance and using all the benefits of other people's money, higher death benefits, more cash accumulation, more tax deferral, and ultimately what we're all looking for, tax-free income. And so that was really the reason we put this company together, this plan together, this strategy together. So with that said, we realize that the traditional retirement plans of the world today are awesome. Don't get me wrong. I'm not going to sit here and preach to you guys that they're not good and they're horrible things, but they definitely underserve the markets as well. And so I think they were built in like many, 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 many decades ago, and they just might be underserving us today, right? So I don't know if they've kept up with the times, so to say. And with that being said, if we look at our national debt levels and we look at just where taxes have been and where they're headed, we're truly concerned that taxes are only going to continue to go up because how else are we going to pay down these national debt levels? Um, and because if you look back in time, they've only gone up, they've really never come down. And so, with that stated, it would be silly to continue to invest all of our eggs into a basket of these traditional retirement plan, right? When we know that income, when it's taken out in our future retirement ages, is going to be taxed. And so, why not contribute into a plan that can provide tax-free income to us in our retirement years? And again, never would I state or advise anyone to stop contributing to their 401k plan or their IRAs. But why not diversify your retirement portfolio to include some untaxed income, as well as receiving your taxable income from your traditional retirement plans. And so for those two exact reasons, that's why we started this awesome company. Richard here, he runs our internal sales. So he's the person that is going to hold your hand through the whole process. I'll explain to you the strategy and how it works, and then Richard's going to walk you through our really awesome agent portal that I think you guys will all love to have access to one day. So we have the stream plan has basically matched the IUL product with the bank financing for your clients. We've done all the heavy lifting for you guys so that you don't have to do that. Like with traditional financing, you would have to go to a life insurance company. You would have to find which carrier is going to be best for your client, and then you'd have to go to a bank and you've got to now financially underwrite that client. We've done all of that for you. So, three pieces of really important information from the get-go. Your clients don't ever have to post collateral. Your clients never have to sign a personal guarantee for the bank loan, and they never have to go through credit checks or reporting. So we've alleviated that right off the top. We've also gone through the matchmaking process of the insurance company and the banks on behalf of your clients as well. Okay, so with that being said, we are utilizing an IUL product with National Life Group. They're our only carrier at this point in time. We are in a ton of other conversations with other carriers. However, National Life Group brought us to the dance, so we've given them an exclusivity. And we're coming to the end of that now, which is why we're having discussions with other great IUL carriers to kind of diversify our books as well. But we've gone to National Life Group and we are using their Summit Life IUL product. And we design it as a 10 pay where your clients only pay in for the first 5 years. All right, so that's the structure. It's a 10 pay, but the clients only pay in for 5 years. So let's go through that. The bank financing all depends on your client's age. So we've tiered it by age groups. So if we take an example of $100,000 annual premium for 10 years, I'm going to walk you through what that looks like for the different age groups and what type of leverage they can receive and what type of out of pocket they would need to pay in for the first 5 years. So let's start with our 50-year-olds and above. If you're age 50 or above and you've got, again, we're just using the example of $100,000 annual premium to the life insurance company. The client would come out of pocket for $50,000 or 50% of that premium for the first 5 years. The bank is also going to pay in that $50,000 or 50% for the first 5 years. And then years 6 through 10, the bank's going to pick up 100% of the premium. So $100,000 in this scenario. All right, now let's go to our 40-year-olds. So if the clients are in their 40s, they're going to pay 40% out of pocket, or in this specific example, $40,000 out of pocket. The bank is going to contribute 60% or $60,000. And then again, years 6 through 10, bank picks up 100% or $100,000 of the premium. And then last but not least, our last age band, which is age 39 and below, all the way down to children, like newborn ages. And I'll touch on that later because that's a really exciting like sales funnel for us. But 39 and under pay 30% or 30,000 in this scenario. Bank's going to pay in 70% or 70,000. And then again, 100% year 6 through 10. So that's our design. Those are the different leverage rates we allow for the different age bands. And when it comes to, let's talk about the structure really quick because I think it's important to just notate that we are an LLC structure out of the state of Delaware, meaning you all as insurance producers must be licensed to sell insurance in the state of Delaware. So you'd either have to have a resident if you live there license or a non-resident license in the state of Delaware to be able to write our program. It's really simple. It takes all of 24 hours to get, and it costs you $100. So it's not too much of a heavy lift. The reason we did that is because for many reasons, but first and foremost, Delaware LLCs offer really great creditor and client protections in the verbiage of their LLC. It's really ironclad. And so that's the reason our law firm who we designed our plan with, and their name is Holland Knight. They're internationally very well known, but they helped us design the structure specifically with the Delaware LLC because of all those safety guards in place for the client. And um, we pulled together accredited investors. So let's touch on that really quick. We had mentioned we're not looking for the ultra high net worth clientele, even though we can take them into our plans, but we're looking for people who are accredited investors, meaning they make over $200,000 a year as an individual and $300,000 a year as a married couple, or they have $1 million of investable assets. So a brokerage account with $1 million cash account, you name it. Um, we're pulling together in tranche formats. So basically, we're creating different LLCs where clients are coming in as accredited investors and they're buying a membership into these LLCs. And the reason we do that is because now they don't have to post those three heavy lifts, the collateral, the personal guarantee, and the credit check, right? So we're alleviating that because they're coming in as a member of our LLC. Our policies are always going to be owned while there's an outstanding bank loan. Our policies will be owned by our LLC. So the stream plan is going to be the owner and the beneficiaries of these life insurance policies on your clients' lives while that bank loan is outstanding. However, the minute that bank loan gets paid off, we transfer ownership to the member. So the original person, the member and the insured can be completely two different people. So let's take for an example, two business owners, right? They're trying to do a buy-sell agreement and they want to utilize the stream plan. And Richard can touch on the benefits of why business owners are intrigued specifically with the stream plan later. But the owner could be me. Let's say Richard and I are business partners. I could be the member, but Richard's going to be the insured, right? And so once the ownership, or I should say that bank loan's been paid off, now the ownership's going to transfer back to me as the member. And I can now, own that policy on Richard. So any questions so far and from anyone? I know I'm throwing a ton of information at you. I just want to make sure there's no questions yet.
So real quick clarity, Nicole.
Yeah,
So I'll throw out the first question. So the owner and the beneficiary is the LLC. Um, Walk me through if someone dies,
yeah.
during the funding process, is the bank the winner, or is they gonna just take their piece and then so just kind of walk me through that if you don't mind.
Yeah, absolutely. Great question. The bank always wins, right? They want to get paid. They're in first position to get payback, rightfully so, because they're lending a ton of money on these policies on behalf of the client. So if a client dies premature while that bank loan's still outstanding, the death benefit's going to pay off the outstanding bank loan. But the good news is that our death benefits and our cash value are always in excess of the outstanding bank loan. By pure design, we structured it this way, so it could never go reverse or negative. So if a client was to die, the death benefit's going to pay out the death benefit will pay off the outstanding loan. And then the remaining death benefit, because there will be some, would then be paid out to the stream plan. However, you're probably like, well, where's the benefit for our client? With our LLC membership, each client receives a private placement memorandum and operating agreement that they must sign off on. And in these two documents, they explicitly list all the rights to their policy during the time that outstanding bank loan is there. So what would happen is death benefit's going to pay off the loan outstanding. The remaining death benefit's going to get paid to the stream plan because, of course, we're the owner and beneficiary. And stream is going to now, because per our operating agreement and our private placement memorandum, we pay that out to the client's beneficiaries. They list in our paperwork within 30 days of us receiving it from the insurance company plus interest. So that's the way that works. Um, any questions there?
Oh, that's perfect because it's always about ownership, making sure that that we're still receiving the promise that we signed up for because that's half the story.
Of course.
So yeah, so that's good to know.
Yeah, we refer to the private placement memorandum as PPM to cut it short, because us insurance people love acronyms.
Mhm.
And then the operating agreement OA. So our PPM and OA, which I'll continue moving forward with those two, um, are very explicit documents that at nauseum go through all the rights the client has. So, for instance, National Life Group, as you probably know, offer incredible living benefits on their IUL product. The client has access to them after that bank loan's been paid off. So, let's say the client doesn't die, but that they come into a windfall or they inherit or they sell a business and they want to pay off that loan early. You might ask, can they? So that they could then gain access to that living benefit. God forbid they had some sort of like health issue going on in their life. The answer is yes. Like we never want to prevent the client from having access to these incredible things in their policy. The only thing we care about is making sure that bank loan's been paid back so that they can then have access to it all. We just need to make sure, because the bank, obviously is out this money on that client's behalf, that they get repaid and then we can allow access to the policy, all the goodies in the policy. So yeah, so question I see about member being the owner and the owner being the member and maybe the insured. I know there can be confusion around this, but I think this is what makes us really different than other programs that exist, like our competitors, so to say, um, is that our member and the insured can be two completely different people. So, for instance, I am the owner of three children policies for my three my three kids have stream policies. I'm the member because I'm the accredited investor, but yet the insureds are my three children. So I'm contributing because again, I'm the accredited investor on their behalf so that they have these incredible plans in place for when they go to either, you know, um, go to college to help me pay their college tuition. If they want to start a business one day, if they want to purchase a first home, they can tap into these policies. And so that's why I'm doing these policies specifically on my children. But to answer the question, the member can be different than the insured. Um, the owner of the policy will always be the stream plan to start out until that bank loan's been paid off, which is when we would transfer ownership of the policy from the stream plan to the member. That is a non-taxable event because of basic partnership rules, meaning if you're a member in an LLC and that we can transfer that ownership, it's a non-taxable event.
So basically, you become the owner, the member becomes the owner after the bank is paid off.
Correct. Exactly. You got that right. And typically, we're structuring these deals where the loan, or I should say, the bank is getting paid off around anywhere from years 12 to 18. It really is dependent on the client's age that they take the policy out of, and then also their underwriting class. So, um, we always say we are only offering this plan to people who are getting a standard rate class or better. However, there have been a few cases we've done a table rating on. Typically, there have to be younger age clients for it to make sense, the design. Excuse me. But we can roll up our sleeves and try to make that happen. Just sometimes the numbers just start to not make sense when the clients are highly rated. So try to look when you're considering clients who would be good for this program. Again, you really want to think, first and foremost, they've got to be an accredited investor. The way we validate that is by checking their last 2 years of tax returns to make sure that they are earning, or brokerage statements to show that they do have that $1 million in it. Um, and then we want to make sure that they're healthy, and then that they really can truly afford these 5 years of contributing to this plan. So you might ask, like, what if my client comes into a situation that they can't make these 5 payments? They are not legally bound to make them. However, it's going to be in their best interest because they're going to walk away from a good chunk of money if they decide to not make all 5 years of those contributions. And Richard, while he's going through the portal and kind of showing you our design in a little bit, he'll go through and he'll show you kind of the cost recovery clients would get if they were to walk away from the plan within those first 5 years of funding. They're not ever going to get 100%, but they may be able to cost recover 10 to 20%, depending on what year it is. But So while they don't walk away with it with a zero, with no money back, it's not very much, full disclosure. So it is really important to make sure that your clients, you're validating your clients that they're really good candidates for this program.
Nicole, we have a good question here. If the insured is an adult child in a college and not earning, can the parents buy the plan? And if so, how much can they contribute? So, to the answer to that is yes. The parents or the grandparents can be the one that we are qualifying as the member for Stream, buying this on now their adult child that is going through college. In that case, if they're between ages 18 and 30, we can go as low as $10,000 a year out of pocket each year for that 5 years. So a total commitment of 50,000. If just like to touch on Nicole's when she was talking about her kids, just to let you guys know, I know this is not part of the question, but we can go as low as $5,000 a year on children under the age of 18. And then our normal contribution limit on anybody qualifying on their own as an adult is $20,000 a year for 5 years.
Right. All right. So we can design these policies one of two ways. So for your clients who are looking for that tax-free income in retirement years, truly that like LERP design. So where you're accumulating cash, you're minimizing death benefit because it really is like a tax-free cash play in later years, right? And turning on that income stream, aka that's where we got the company name from. Is we can design it for income or we can design it for those individuals who have an estate tax liability and are looking for a higher death benefit amount. So we can do it on a single life or a survivorship product, which is really cool for married couples who either have a large estate and need to pay off that estate tax. They can now use other people's money to help fund that, or maybe they just want to leave large inheritances to their family, or it's maybe a split family, right? You can get really creative with the designs. Um, and the other thing that makes us very different from some of our competitors as well is we do allow 1035s into our plan. So if you are sitting with clients that have these large whole life policies with a ton of cash in them, and you're doing a policy review and the cash values at a, something crazy close to the death benefit amount, and there's really no reason that cash is just sitting there and it's not really doing anything for the client, you can now transfer or 1035 that efficiently over to the stream plan, and that can help pay these 5 years of contribution for the client. So with all of that being said, that is our design in a nutshell. Is there anything I missed, Richard, before I start passing it over to you?
Well, I think that's a good segment. So I'll touch on the different sales verticals that we have. Really, these are ways for you guys to be able to position these to your clients or sales ideas on who to look out for when it comes to recommending the stream plan. And then I'll also walk you through our portal. And then before I do that, Nicole, you want to touch on the agent certification before we
Yeah.
give them access to our portal?
Yeah, so the last year we've devoted our lives to building out this piece of technology, which we call Streamline. It is our agent portal for you to log in as an agent, run your own like quick estimates of numbers, full client presentations. It's also a client CRM for all the different stream policies that you're about to sell. And it allows you to keep track of all the clients you've sold stream policies to, and it helps walk you through the renewal process, which Richard will also walk you through. To gain access to that, it's really important for us as a company that you guys are truly trained well and well educated on how the stream plan works, because before we open up that access for you to kind of run with it on your own, we truly want to make sure that you guys understand all the nitty-gritties to our plan. And so what we've done is we put together an agent accreditation course. It's online, it's free to access. All you need to do is raise your hand and email us, and we will email you the link. It is 4 hours long in total length, but it's broken up into about 30 very small segment videos that you can either listen to while you're driving home from work, run it in the background while you're working, you name it. But it is a variety of videos of all the people that work here at the Stream Plan, and it walks you through why we started the company, who I am, my business partner, who Richard and the team all are. And then it goes through all the nitty gritties again of like the strategy, the design, how we stress test our designs, our different sales verticals. So, all the different people that we've seen come into these plans, and we've kind of broken them into like 4 or 5 different segments. So we go through those in detail. We go through overcoming objections with clients. I mean, we've sold hundreds of these, so we understand like all of the objections. We've heard them all, and we want to share those with you to help you be better equipped on how to sell and answer these questions as well. So that agent accreditation must be completed in order for you to gain access to the agent portal Streamline. At the end of the course, you'll receive a certificate, and once you email that and provide it to us, we'll then unlock the access to our agent portal. So again, 4 hours long. I know it sounds like a heavy lift, but we've actually received like pretty good reviews from the field. I thought a lot of the agents would like throw their hands up and huff and puff that they had to complete this, but we've been really lucky that we've gotten, great feedback. It's not very professionally done, full disclosure. It's like a video of us just recording ourselves like this. One day we'll finally get our butts into a studio and make it more professional, but I will say, I think it's cool that you'll get to know us as a company and our personalities, because we're the ones talking to you as if just like we're doing right now, actually. So with that said, I'm going to turn it over to Richard. He can walk you through our agent portal, which I think is probably the most exciting thing, because it really streamlines the whole process. It really helps you understand how to do this all on your own. And then we can also touch on the different sales verticals as well.
And then I just want to reiterate too, if you guys have clients that you're thinking, now that we've gone through a bunch of this, that you have top of mind, that this might be a good fit for, and you haven't completed the training yet, we can still run these illustrations for you on your behalf and turn them around to you in less than 24 hours. So it's not like you have to go through the training before you can sell one of these. If you have a client ready to go and you're wanting to get this case ran, we're more than happy to help you through that process. We just ask that you will go back eventually and get that training completed. But this is what our streamlined agent portal
Richard,
looks like. Oh, yep, sorry. Go
I'm
ahead.
sorry. I can't hear you very well.
Oh, is it any better now?
Yes,
Okay, so I might have
thank
leaned
you.
too far back. I apologize. So what I was saying is, basically, if you have a client top of mind and you haven't completed our training yet, if you wanted to have an illustration designed, we're more than happy to get that over to you prior to you completing the training. If you have a client that's ready to move forward, we just ask that eventually you go back and you complete that training. But what you're looking at here, this is Streamline. This is our agent portal. And what you're looking at is it from the agent view. When you're creating quotes for your clients, they will also get invited to this portal from a client view. And the reason for that is we designed this to allow them to view the designs that you're creating for them, as well as sign all of the documentation that we need to validate that they are in fact an accredited investor, and DocuSign those through our portal before we go to the actual carrier application with National Life Group. First place I'm going to start here is on the estimator. So this is a quick and easy tool that you can use, whether you're sitting in front of a client, you want to pre-fill these out, have them saved on your computer. Our application here is mobile friendly. So the website, you can access this directly through your phone. But after you enter in these 5 pieces of information, hit calculate, this is going to reach out to National Life Group and provide you with live numbers here on the screen that'll describe and show you how much income a client can take at whatever age you decided to go with here. So in this case, I'm saying a 35-year-old male contributing $25,000 a year for 5 years and starting income at age 65. Based on those figures, starting at age 65, they'd be able to distribute about $160,000 a year tax-free. $125,000 total commitment from the client over that 5-year period. Their initial death benefit is just under 1.8 million. If they turn on an income stream starting at age 65 through age 85, they would have distributed just over 3.3 million tax-free out of their policy, still having a death benefit of about $1 million left over for their beneficiaries. You scroll down a little bit further, this breaks down the leverage ratio that Nicole touched on earlier. So because they're under the age of 40, they're getting a 5-to-1 leverage ratio, or 25,000 that they're contributing represents 30% of that overall premium going into the policy. So because they're contributing 25,000, the bank is going to contribute $83,333 for 10 years, of which the first 5 years, their 25,000 contribution represents 30%. Continue to scroll down, breaks down the cost associated with the program. So all the banks that we have on our platform, there are no banking fees or charges that are additional. The only thing that we charge in outside of the actual policy itself, the cost of the insurance, is a $750 annual membership fee. And this is baked into their client contribution. So the way it would work is when we're ready to fund the tranche, after we've collected all of the contributions from all of the clients involved, when they wire those funds or send the checks to us, we hang on to $750 of them each year before we wire the remaining funds over to the bank. And then it breaks down a little summary here for you. Next step, because this is just a quick quote, you're not getting an illustration out of this. If you wanted to design a 8-page presentation for the client with an actual illustration, all you would need to do is hit this create quote button. This is what will be generated for you. So you're going to get a really nice title page here, a little bit of a background on Stream, reinforces the 5 short years of funding. Then it touches on what Nicole was mentioning earlier, why we think traditional retirement plans are not going to be sufficient enough on their own, and then how adding Stream could benefit that client, and then what you're designing for your client. 5 short years of funding of 25,000, and then how much income they'd be able to get projected out. Next, you're going to see that benefits overview and loan overview, just like you saw before on that estimator screen, as well as the bar graph showing all the contributions going into the policy, as well as the income coming out on the back end. Continue to scroll through the presentation. This will bring up the actual plan design. So if you notice here, the $83,333, this is the total premium that National Life Group would be receiving from the bank for the total of 10 years. This column here, this is the bank loan. So the loaned premium plus any additional interest that is accumulating on the policy. This is the annual bank loan rate that we are assuming, as well as what the forward-looking curve is on that. Client's contribution for the first 5 years of 25,000. This contribution is going to be used to pay down principal and interest on that loan for the first 5 years, which is why you see the total loan balance is not the full 83 plus any capitalized interest. It's the difference between the 83,000 and the 25,000 plus any additional interest. Next column here is the cash value that's building in the policy. The net cash surrender value in excess of that bank loan. So if you notice, this is always going to be in the positive. So there's an additional $10,000 or just under $11,000 in excess cash of that bank loan. So like Nicole was mentioning earlier, what happens if the client gets in and for whatever reason we can't afford to make years 2, 3, 4, 5, and 6? What happens to my policy? So in that case, if we can't skip a payment, because we're always look to see if it's possible to continue that payment in years possibly 6 or 7, then what we would do is we would have to surrender the policy, pay off the bank loan, and the client would receive the excess cash in excess of that bank loan returned to them. So worst case scenario is they've had insurance coverage for a year or however many years the policy's in force, and they'll cost recover a portion of their total premium. I'll touch on the annual income in just a second. And then the net death benefit, this is after repaying that bank loan, what the client's beneficiaries would receive in any of these years. Typically, somewhere between years 12 and 18 is when that bank loan gets repaid. This is being shown here in year 16 in red, this 1.2 million. After this transaction takes place, this is when Stream now transfers ownership back to the member. They would now control the policy outright. They can let it grow, turn on an income stream. They control the policy at that point. And we said in this scenario, let's turn on income at age 65. So if you scroll to the next page, that's displayed here in green. If you continue through the proposal, we show it to age 100. Know that this will carry out to age 120. And the final 2 pages of the design or the proposal go over some frequently asked questions. So all of these answers and questions are also spelled out in our PPM and OA. These are just some of the frequently ones that we get during a lot of our client meetings. What you will also get when you create the quote for the client is a copy of National Life Group's carrier illustration, which is displayed right here. You can download that right over here. Next step would be to start the enrollment. So once a client is ready to move forward, there's a button that says proceed to application process, which starts this enrollment process for the client. Because we are in the state of Delaware, you'll enter in your Delaware license number here. You'll DocuSign the carrier illustration as the agent. This next step will unlock for you now, as well as for the client. These are the documents that they will need to complete in order for us to validate that they are in fact accredited investors before going to application. Because this is in the agent view, the difference will be when the client logs into their portal. Next to each of these download buttons, there'll be a DocuSign button here for them to complete everything through the portal. So nothing has to be printed out, wet signed, scanned back in, everything can be signed through the portal. Lastly, they'll upload 2 years of tax returns here at the bottom and a front and back copy of their driver's license and hit the send for review button. What that's going to do is going to prompt us at Stream that a client is ready to move forward. We'll go in and validate all of the documents are signed correctly, they're filled out correctly, and that they do qualify. Once we sign off on everything, you as the agent will be sent an email saying now you can move to the insurance carrier application. This next step will unlock for you. There'll be a button just like this that'll be right here, a little bit below this step that says Launch iGo eApp. iGo will then launch directly through our portal and pre-fill out the application with some information that you've entered here when creating the quote. Additionally, with some of our information that is needed, and then any additional information will be listed here in our portal for you on that screen. Once you submit for underwriting, you'll go through normal processing for case management on the medical underwriting side. If you need any assistance, we always have an in-house case manager for our Stream team that we can assist with that as well. And then once they are ready to fund, we have everybody in the tranche that is paid. We'll send out a letter letting the client know how to wire in or mail their funds to us. Once the bank receives that, wires them over to National Life Group, the policies will get placed in force. This portal also acts as a client CRM for you guys. So any policies that get placed in force under this policy tab, you'll be able to see all of your in-force policies with Stream. If you click on it, it'll display the client's policy number, which tranche they are a part of. It'll show you what year the contribution they are on out of that first 5 years. And then the cash value, the death benefit, and the outstanding loan balance. These values are updated every Monday night with a live feed from the carrier. So at any point, you can come into the portal or your client can come into the portal and view their policy and see where they stand. They'll be able to see who their beneficiary was that they designated. And then it archives all of the documents that they completed and signed prior to going to application. Their insurance policy is downloadable here through the portal. All of the anniversary statements from National Life Group, as well as any in-force illustrations we run on an annual basis for the client, showing what their current interest rate was on their crediting and how that compares to the as sold, will also archive here in the portal for them. So I know I went over a ton right there. Are there any questions or anything that you guys would like me to retouch on?
Richard, I had a real quick question here for you.
Yes.
So I'll ask the question, and then one thing I want to touch on after my question is answer the financials. So make sure we understand what the financials are for people to get the stream plan.
Sure.
But estimator, I understand that gives great information, but it doesn't give like the full-blown PF quote. Is there a way to get the quote, like the PF quote, without having to put in a client's email address? Because sometimes, I'm not sending it off to a client to start the process, but they want to see it. And so I'm like, well, I'll just put phil@valorfs.com. And then it's like, well, that email address is already used. So I just didn't know if there's something
That's a
loophole
great
or,
question.
yeah.
So if I'm on right now, I'm under the clients tab. So if I click on this is just, and again, we're in the staging environment. So in a live thing, this would be a little bit different. But basically, when you're creating a quote for a client, let's just run through that real quick. So I'm going to add a new quote for a new client. Oops, I put existing client because I couldn't see. When you're entering in their name and their email address, I always recommend if you have the client's email address, enter in the correct email address, but leave this box unchecked. Because if you uncheck this box and leave it blank, when you complete their quote and you actually run it, if they decide to move forward, you can then go back in to the client itself and click on send email invitation. So basically at that point, when they're ready to move forward, you can invite them to the portal. But if you create the client in there with a dummy email address or a fake email address, it'll always stay in your portal and there's no way to delete it. So if you needed to go in and now run an actual case, there'll be a case in there that just constantly sits in there. There's not a way for you to delete it. So it might get a little cluttered. If you don't mind that, then you don't have to worry about it. But I always say enter in all of their information. Just don't invite them quite yet until you've gone over it with them.
So is there a way to create a quote without putting in all that info, or is that not possible?
It's not possible, so you would have to just enter in dummy information if you wanted to
Okay.
just do a sample that didn't have any name attached to it or anything like that.
Just curious.
Yep. And then your financial question.
Yes. Thank you.
Oh, go
Oh,
ahead.
what are the financials for the minimum requirements for people to do these plans?
Yeah,
I
so if
probably
you're,
missed it, but if you
no
said it,
worries.
but
If
yeah.
you're a single individual, you need to earn at least $200,000 or more of income, or have $1 million of investable assets, excluding your primary home. For a married couple, the only difference is it's $300,000 or more of income, or that $1 million of investable assets. The way that we validate that at Stream is during the process, they'll fill out a financial questionnaire that goes over their income, their assets, their liability to show their overall net worth, as well as they need to upload their previous 2 years of tax returns. So that is the way that we validate that.
So and I'll kind of share with some people, stuff that we're doing too. Stream has been a pretty big part of, working with the NIL space. And, I'm sure you guys got the good news in the partnership with NLG that they're allowing us to go up to 4 million, which normally for 18-year-olds, like the max is like 1 million or 2 million. So, I just wanted to say I appreciate the partnership that you guys have. and utilizing even something like that with some of these kids who are getting a giant windfall to leverage that opportunity and push it through. So I know they don't have 1 million in investable assets yet, but understanding the situation and where they're going, I think that's a great story in regards to the partnership with what you guys have and growing from that standpoint as well. So um, I think the big thing too is a lot of the people on this call that I know I've worked with as well do deal with a lot of kids. The way to get into the parents is to get through the kids, college planning, or conversations on how to leverage assets for kids to grow. So, when I heard you guys talk at the Three Mark event, the big thing was, like juvie cases, and I guess I would say kind of explain the process of like where do they go for juvie quotes, and then on top of that, if you could put in the chat the way to start the certification process, that'd be helpful too.
Yeah, absolutely. So let me quickly go over our different sales verticals, and then I'll kind of touch on what you just mentioned as well, because I think this is important to remember. We have really four, now five, if you're considering the athletes, different sales verticals on how to really think about this when positioning it to your clients or who to really look out for. The first one is live stream. So this is just the accredited investors, the high income earners, not rich yet individuals. We call them Henrys of the world, where we're doing this for income designs, death benefit only design, or we can also do this as a survivorship chassis as well for estate planning purposes. And then BizStream being the second one, this is where we're focusing on working with business owners. So the typical types of planning that we can do are buy, sell, key man, deferred compensation planning. This is very popular in the business owner world where we're doing this on the buy sell side because typically buy sell planning is done with cheap, inexpensive term insurance. It usually doesn't allow for the growth of the company, so it has to be renewed every 10 to 20, however many years that they take out the term for. They're not left with anything to draw on after they retire or when they exit their business. So we always say if the business owners are willing to contribute a little bit more into a program, a permanent insurance policy like Stream, it will allow for the growth of the business to continue to rise because the way we structure our program is with an increasing death benefit. So that allows for the growth of the business, covers their buy sell. Then, for all sake of argument, hopefully no one passes away and they either eventually sell their business or transition out of their business. They're left with this tax-free pool of income that they can bonus out to each other to be able to draw on in retirement. Third one is GenStream. So this is where we're doing it on juveniles and doing multi-generational and legacy planning. So like Nicole did this on her 3 children. I don't know if you want to touch on that before I.
Yeah. So this is where, wealthier parents and grandparents can put money aside or gift money uh, to their grandchildren, to their children, but also pairing it with other people's money to kind of really like add jet fuel to the growth of these plans. And so, again, we touched upon it earlier, but for those of you who came a little late to the meeting today, is I, as the parent and as an accredited investor, can be contributing to these plans for my children. So that's exactly what I did about a year and a half ago. I took out a policy for each of my children. I have 3 of them. I'm contributing $5,000 per child because they're young. And the bank is putting in about $17,000 in addition. So these policies are, it's incredible what the cash they can accumulate over the decades of my children's lives. And so they either have access to the cash, in 12 years from now to either help pay for their college. And let's just say my child was 10 years old and maybe, in 12 years from now, when we go to pay off that loan, they've already gone through college. Well, guess what? Me as a parent, I'm still going to have that outstanding loan with those colleges, right? Those student loans that I'm going to have to pay off. And so I can tap into my children's policy, pay off that existing student loan, so maybe it isn't in time to pay for it that exact year for those 4 years they attend college, but maybe a few years after they attend college, I can now pay off those student loans with. Or maybe my kids don't go to college altogether. They decide they want to start a company. They can tap into the cash value then. They can utilize the cash for either a real estate purchase, a company, pay for their wedding, you name it. And the options are endless, but I think it's a pretty neat um, sales pitch to people, to families specifically who really want to help the next generation. They have the means to do it. And I did see that there was a client. So if like for people who have multiple grandkids, right? I think the question is, can you do it for multiple? Absolutely. We've got many of our members, like grandfathers, grandmas, I should say, that are contributing. We've got one in particular right now that has 7 grandchildren, and they're doing $10,000 a piece for 5 years on each of their 7 grandkids. So yes, the members can become members multiple times as long as they qualified for an accredited investor and can financially afford these 5 years of contributions into the plan. Absolutely. They can take out as many of these policies as their finances allow them to. So,
And you can
uh,
do single pays too, correct?
yeah, you can. So we can design it as a single pay if they'd like. We can structure it, anything more or less than those 5 years. So we do have some clients come to us and say, hey, we want to continue to contribute to these policies. Can we do that? And the answer is absolutely yes. You can pay in longer than 5 years if you want to. Um, so we're a very flexible, fluid company. So I think that's the beauty of our plan compared to a lot of the other ones that exist out there. And then last but not least, it's Medstream, correct, Richard, that you haven't talked about?
That
Okay.
and an athlete stream if you want to use that one
Yeah.
as our
Yeah.
newest one.
Wow, you're coining it. I like
We
that.
are. Yes.
Yeah,
Uh,
so MedStream is really where we're gearing this towards medical professionals, them being very delayed in saving for retirement when it comes to all the schooling, additional schooling that they have to go through, not being able to contribute to traditional retirement plans during that period of time, getting out of college, paying off these large student loans, getting into practices where they have to purchase some equipment or finance a building, an office space. This allows for them to contribute for a short period of time of 5 years and kind of make up for that lost time with that supplemental income that they'll be able to generate from this policy in retirement years. And then obviously, lastly, athlete stream, where we're doing this on now athletes, college athletes, professional athletes. If any of you guys know how long athletes typically last in their profession, in the NFL, it's, I believe, only 3.5 years is the typical lifespan of an NFL player. So this is really a great way for them to not go out and just blow all their money initially on a house or a car or what have you when they have all their friends around coming around asking for everything as well. This is a good way for them to do some real planning for themselves in a case where they don't have a long extended career. So cover their families if they have it, cover themselves as far as an income stream on the back end.
I
exactly.
was I was gonna ask one question, but I know Jay's had his hand up for about 10 minutes, so I'll let Jay ask the question first. Sorry, buddy.
One quick question. Let's say, from the financial standpoint, let's say the income last year for me is say 150,000, and this year my wife got a job altogether 300,000, right? So this year it is 300,000, but not last year. Will this family still be eligible to?
Yeah, we can take a look at that. So what we would look for is if this is going to be a continuing type of income stream for you guys, then we can consider that. We'll also take into consideration what the liquidity is for the family, so what their total assets look like as well. If we can justify that, then we would absolutely consider them into the program. So for instance, we're doing this a lot with medical professionals because some of them, like I said, they don't earn those income streams for the first few years of their career, but they are given contracts.
Right.
Given contracts with these different hospitals or companies that they're working for that's saying they're going to make X amount of dollars moving forward. So we can use those contracts as well as in conjunction with their tax returns to qualify them. So
Okay. Yeah, I have one more question. Let's say if someone starts with 100,000 max funded premium, and couple years they pay, and the third year, hey, this year I don't want to pay as I will. It's a flexible policy. Maybe I would pay next year. This might happen sometimes. So in this kind of scenario, whatever the percentage bank is supposed to pay, will the bank pay even if the person don't pay?
Yeah, so if we're looking at a situation like that, this is part of the reason why we do our due diligence in the beginning of this to make sure that these clients that we're having participate in our program are truly financially savvy and can afford to make these payments. But ultimately, we can't control the future and we can't foresee the future. So stuff does happen. So in a case where, let's just say the client gets in after the first 2 years, they've made premium payments 2 consecutive years, and something happens in year three. What we'll do is we'll do some work on our end to see if there's a possibility of skipping that third year payment and either making it up in year 6 or 7 or down the line. If that's not possible, then ultimately we'll have to surrender the policy and then pay back the bank loan, and any additional excess cash will return to the client.
Okay.
So we always look to save the policy and see if it's possible to keep it going. But if we can't, then unfortunately it does have to be surrendered.
Okay. Thank
I
you.
will say this
Oh,
though, too, Richard, from your standpoint, the big elephant in the room has always been Kaizen for stuff like this. They're not flexible like that. It's like five or die, and that's it. And so, like, the idea and the opportunity that you guys have from the flexibility on that standpoint and offering the allowance to, go further or longer if people want to. Most of the time in these, like, the whole story is you finish your 5 years, hey, let this one do its thing and then start another one and let it do its thing. So, extra sale, great, but on the same token is if someone has uninsurable or whatever, now you have this policy that you can add to it still. That's extreme flexibility in usually what's a rigid design. So I would say hats off to you guys on that. I was actually talking to someone earlier today, and they were like, well, hey, what about, because you're getting compounding on the front end, on the back end, when you pay the note back to the bank, is there a way to defer like over 3 or 4 years to give back to the bank so you continue larger compounding? Or is it one shot to give to the bank and that's it? And I'm just curious if there's flexibility there.
yeah, so typically we're making those payments in a lump sum,
Yep.
and just doing it all in one shot.
Okay.
But again, because we allow for additional premium to go into the policy, if a client ever wanted to come out of pocket for a portion of that total bank
Mm,
loan and not have it be taken out of the policy cash value when we normally do it somewhere between years 12 and 18, they
yep.
absolutely can. So just to give round numbers, if we had $1 million in total loan that's owed back to the bank, if a client said, I want to throw $500,000 at that, and instead of being able to pay off the loan in year 16, by doing that, we might be able to pay it off in year 13 or 14 in that case.
Mm,
Then they also get to keep more of the cash value working for them tax-free in the policy, which will ultimately increase the amount of distribution and death benefit they'd get on the back end.
right. Um, and the last question I had, and I'm sorry to dominate the questions, like,
No, please, we
uh,
encourage it.
so if I could offer maybe a sixth line of death stream, like are you guys focus at all on the affluent who want to have a leveraged death benefit on the back end? Is
Yes, I
that
would
in the
say that's
plans?
about 10% or so of the designs that we're getting requested is, and that's another thing that makes us stand out is we do this on a single or second to die chassis when it
Thank you.
comes to for estate planning purposes or leaving a legacy.
Yep.
It's been coming more and more popular. And we originally, when we designed this program, it wasn't a part of it, but the field came to us and said, have you guys looked at this, or is this something that you could be doing?
Yep.
And we went out, we looked at it, and yes, now we incorporate that in our program. So we can
Yeah.
do this on individuals on a single life for death benefit only designs or second to die.
Yeah, I have a high net worth client who he's uninsurable, but his wife is. And the second to die we were looking at, but leveraged makes a hell of a lot more sense.
It's
So,
pretty wild what the numbers look like.
yeah, I'll reach out to you. I got to talk to my business partner who has it. But, I think again, so what you see on the screen of what we have once people get certified, and again, if you have that link, I know you emailed it to me, but if people are here and they want to click it right
Yeah,
away,
let me see if I
yeah,
can put it in the chat. It might be too long, but hang on one second. While I
yeah,
have you guys on here, I can try to get that.
yeah. But I think the big thing too is having you as a resource to help out as well.
Yep.
Which I'll get the information out to everyone too, is vital because you don't have that with the other guys. And I think that's the cool thing is that, you guys are willing to go above and beyond. And, I'll be honest, anytime you do these type of the link doesn't work.
Does it not work?
Um, nah, it's just bold. I was gonna say, for
If you scroll
folks,
down, it should be able to click on that actual link. There's a click here button. Is it not showing up?
oh, it is like if you put on the bottom of the yeah, that's interesting.
I can always email it to you again and then you can pass it
Yeah, I'll
out.
distribute.
That works.
Yeah,
But one thing that I will mention too, with our portal that allows you to create your own illustrations, one of the things that it does not allow for is to do the illustrations on juveniles or to do death benefit only designs. So in that case, please reach out to myself. I'll put my email address as well in the chat. So feel free to reach out to me. I can get these turned around to you in less than 24 hours, either design. And then what I also offer to everybody that I work with, or anybody on my team can do this as well, is we can help you guys go point of sale with your client. So if you want to include us in any of your client meetings, we're more than happy to do that for you guys. Utilize us as much as you want or as little as you want. Either way, it does not change the way that you guys are compensated on behalf of National Life Group and Stream. So I don't know if that was touched on yet either. The way that Stream goes on the application is we go on for 25% of the commission, and then you guys as agents go on for 75%.
which is cheaper than the other guys.
Correct. Thanks for the plug, Phil.
That's
Yeah,
75% of the total premium or
yeah,
the
Target.
member contributions, I mean.
No,
Total
that's the
Target.
commission, yeah, of the target and the excess premium.
Okay,
And,
cool.
So
and so keep
75% to you as the agent, 25% to Stream.
and keep in mind when you do that, because premium finance has high early cash values, NLG spreads it out over 5 years. So whatever the commissionable
Over
premium you have,
6 years, actually. So,
six? Okay,
yeah,
six
over
years.
6. So, year
Okay.
one, you'll make X amount, and then years 2 through 6, it's a little bit more than year one. And then years 7 through 10, you'll also get renewals. So, you make
Yeah.
commissions for a full 10 years. And then all of the insurance credits, as far as qualifying for trips, you get upfront year one. So, that's not spread out.
So the big thing, because I know we're already 10 minutes over, we hit overtime. What I would say is folks, the big thing here is, going to these trainings and just listening is just like going to a football game, standing in a huddle, and then going for halftime and not doing a play. So I think the big thing is, in respect for Richard's time, Nicole's time, which she had to leave, action steps, right? I put the link in the chat, and so let's get certified. It is free to do, obviously. And then let's think of about 3 to 4 clients each that you think can qualify or quantify for this. And set up time with me or your, leader if you want, whoever it may be, here, and let's start putting a plan in action. Because when you think about this, if you did one of these a month, you're going to start building up a pipeline. And so for the next 6 years, you're going to get compensation. All of a sudden, you're going to see a buildup. And if you keep it consistent, it's going to get bigger and bigger.
Yeah, we have some agents that have participated with their clients in every one of our tranches. And every year they're starting out the year with upwards of $75,000 in commission with just upon the renewal. So it almost acts like an annuity payment to yourselves.
Mhm. So, with that, I'll say, we are very happy to have you guys on, Richard.
Appreciate the
Expect more.
partnership.
Yeah, we'll probably have a few more of these trainings too. Deep dive in some illustrations, stuff like that, or just to kind of go through the process. But I can't thank you enough. I know my partner Roderick is extremely excited. Like you would not believe some of the conversations we had over the last week, and
Yep.
yeah, it's going to get really, really good and nuts in a good way. So, thank you guys. Same bat time, same bat channel next week. And then we'll take a break off for the 4th of July. And once again, you guys have a great rest of your day. And if we don't talk, have a great weekend. So, thank you again, Richard.
You're very welcome. Nice meeting everybody.
All right. See you guys.
Bye, guys.